I welcome you all on behalf of Association of Muslim Professionals to the AMP Webtalk. Association of Muslim Professionals is a non-profit organization and is registered in India, United States of America, United Kingdom, and Australia. AMP has completed its 12 years in serving our community in the field of education, employment, and empowerment. AMP has a vision to positively impact lives of 10 million people by the year 2030. AMP's mission is to empower the underprivileged for the greater benefit of the society and nation as a whole. AMP's vision is to be a model community which is advanced in education, socially progressive, culturally vibrant, politically influential, and economically dynamic. So what AMP has achieved in these past 12 years is right in front of you all in the slide. You can just have a quick look at it so that you can understand our achievements, what projects we do, what activities under these projects we conduct. We have school development programs. We have employment assistance cell. We have a project on scholarship and self-employment. AMP got its resource center with 600 plus career counselors. We also do awards and partnerships. These are our main flagship projects where we work towards benefiting our community and nation. Apart from that, AMP's present is in front of you too. On ground, AMP got more than 100 active chapters. We are present in 25 states and 16 countries with more than 6,000 active members. AMP's online presence, we have 1,25,000 members and professionals who are connected to us through various social media platforms like Instagram, Facebook, Google Groups, WhatsApp, LinkedIn, and Twitter. If you wish to join Association of Muslim Professionals, you can just log on to #join AMP, and we will be glad to have you on board with us. All right, so now let's quickly move on to the live session, and I see that a lot of participants have already joined in. So I would like to welcome everyone once again on behalf of AMP. I am Humaira. I am representing AMP and I am your host today. I'm associated with AMP as a full-time volunteer member and also working as operations manager at AMP USA. Along with me, we have Mr. Mohammed Shah Ansari, who's the president of AMP USA from Columbus. I would like to introduce you all to the speaker of Soft Skill Webinar Series Phase 2, Mr. Shah Siddiqui Saab, who is the CEO of Riyadh Academy. Mr. Shah Saab is a career coach, a training consultant, and a management faculty with more than 2 decades of experience in the area of management sciences. Mr. Shah Saab has joined us from Riyadh, Saudi Arabia. I would like to introduce you all to Mr. Saeed Saab, who's the Director of Technology at Swift E-Learning Services. Mr. Saeed Saab has joined us from Hyderabad. Saeed Saab will be taking 2 to 3 minute session about the LMS and assessment at the end of the session, inshallah. Those who have issues and questions about LMS, I would request you all to please hold on to your queries till the session ends. After Shah Saab's session, we will be taking LMS related queries. Please refrain yourself from texting and asking not related questions. For topic specific questions, we will be having a Q&A round as well. Now I will request Mr. Shah Saab to proceed with the session. Thank you. Over to you, Mr. Shah Saab.
Hello, everyone. Welcome back. And I appreciate your logging in today. I hope my voice and the picture is clear.
Yes.
So thank you for joining in our series webinar. Today's topic is business acumen. I'm sure you all are familiar with the way business acumen works in today's corporate world. But we'll take a look at how and why we have business acumen today in our soft skills series. So we will start out by defining what business acumen is. From what I see and from a perspective, business acumen would be dealing with something relating to the business transactions or operations. But it's very important for us to understand from our approach, the holistic approach, what business acumen actually is, and how does it relate to your skills that you have been acquiring so far in the area of soft skills, and then how the application is related, the way we're moving up with our background in soft. So with that in mind, I would like to ask you a question as to what really business acumen is from a holistic perspective, from a standpoint of organization which has various functions, or from the perspective of a system which has subsystems. Why is a business acumen important? You may have heard of a sentence that people from a specific industry or from a specific location have business acumen. So what does it really mean is what we will look at and see its applications. So how would we define business acumen from our standpoint, from our systems approach, and from our soft background? Um, well, I'm going to give you a minute to think, or a few seconds, since I don't get a feedback about sort of a pre-assignment as to what business acumen is. If you all are, having your writing journal handy, try to think of something, either jolt or think of something that you can write as to what business acumen would be, and how would you treat yourself as somebody, a professional having business acumen. And then this would be a pre-assignment for you all to think. And by the time we end, and you will have your perspective change. So this is the purpose of a pre-assignment. This pre-assignment worksheet is also available for you on the LMS. All right, so how would one define business acumen? Well, to begin with, let me start out this way. Have you ever heard of a term external CEO? I'm sure you may or you may not have. Some of you may. So external CEO is a relatively new term, and this is what we mean by looking at the arena outside our scope or outside our organizational settings. So I'll give you an example if you're not familiar with external CEO, who is nothing but a consultant, okay, an external outside consultant, which has been in fashion lately. Another example would be Steve Jobs, for example, had excellent business acumen. You can probably relate to, what business acumen actually means now. So with that, we can define business acumen. Well, we can actually define it in a loose fashion as somebody who has an insight to an external market, or who have access to the happenings of an outside external market. So in other words, we're trying to look into an environment which is not internal to your organization. So what entails in the external market is what business acumen would entail. So this is how we would define it to begin with. So it's loosely defined as, somebody who's having access and an insight to an external market. So in other words, we're trying to step out of our soft background, of our area, of our function within an organization, and then try to look at what's going on outside. So that's how business acumen is looked at. If you were to have business acumen, then you would have an understanding of how the world of business works outside your organization. Now we'll build on this as we move on, but this is how you would start out. And then we can look at, compare it with our background in soft skills. As you all can imagine, we have a theme, we have a specific course that we have been taking, trying to journey through the area of the world of soft skills. We started out with the modules that we did in the last phase. And this time we spent some time, considerable amount of time, business writing, communication. And then we did summarize all the soft skills. So we have something in common here when it comes to business acumen as we relate it to the soft skills area. So just like how soft skills are innate in an individual or infused in an individual, are inbuilt, same way is business acumen. So if somebody who's able to start out by initiating a project, okay, or starting out as an independent contractor, consultant, and then building for himself eventually an empire would probably be seen as somebody having business acumen. Now, how does it relate to us? It relates to us by saying that it could be innate, but it's also adaptable. It's also learnable. So these skills relating to the business we need can also be infused in a personality. And that is what we're going to look at as to how we can develop our business acumen. How could we relate ourselves as a professional having business acumen? So this is how I would start out and look at business acumen. Now, this is a survey course, which means that this is, a course where you would be introduced to a lot of new terms that are very important from a business standpoint, and business in the sense from a managerial perspective. And as we journey through the soft skill, we're trying to get to an area where we need to have very, very articulate communication, how we would be able to have interpersonal relationship, and then how we would be able to move up and understand the emotions. So the soft area that we're focusing on is taking you on a ladder, journeying towards the topmost administrative and managerial plateau or a managerial slot. And this has a lot to do with the hard skills, but we're not looking into hard skills right now. We're assuming that you have the hard skills that you needed to get in, but now the point is to move you up to the topmost administrative position. So for that reason, you need to have business acumen. And the best part about business acumen is if you don't have it in you, or if you feel that you lack, you can build on it. How would you build on it is what we would look at today. So I hope the definition and the approach and then the way we are going to treat business acumen is clear. So by survey, I meant you will be introduced to a lot of topics where we're not expecting you to know anything about it, or we're not expecting you to be thorough in it or to know every bit of it. And we are definitely not talking about a level where you would be certified or called a specialist in a particular area. So we would start out with something very simple like understanding the big picture. And what does it comprise of? It comprises of marketing, management, and within that, it comprises of strategy. And within strategy, it talks about different levels. And within levels, it will talk about individuals with various skills. So it's a top-down approach that we would look at to build on business acumen. So with that, we would move on to the slides. And any question that you may have, of course, we will have the time. And this is a survey course. So we have a lot of topics to deal with, but I would just be introducing you to quite a few with some emphasis on some topics. And with that, you will be having these skills in you, but then the journey of acquiring the acumen would continue for the next foreseeable future that you have in the world of business. What I mean to say is you will be building on these different acumens or the different requirements, the skills, in addition to your soft skills, and they would complement each other. I hope the presentation mode is on, and we will start out with our first slide, which is once again the iceberg model. You have been seeing the iceberg model ever since we started talking about soft skills. So the same principle applies here when it comes to business acumen. It's a very important skill that you all need to have. As you move up, as you progress, as you fast track yourself in the world of business, whether you are working for your own organization or you are working for somebody else. What I mean here is whether you are the CEO of your own self or you're trying to be the CEO of the organization you are in, you would need excellent business acumen. So how does the iceberg model relate to business acumen? What it means here is just like how the traits are hidden within an individual, and just like how traits are being explored in your recruitment area or in your delegation area, same way the business acumen is also hidden within you, like in dark spots, hidden areas, something like a blind spot that you have to overcome. Okay, sometimes you have judgmental errors, attitude related issues. So these are all areas where business acumen will take over. So all you have to do is unhide these skills, bring it up, and build on it. So these skills are hidden in you, and that's how um, you could be progressing in the world of business without formal training or without the discipline that we need in exhibiting business acumen. So if you have it inbuilt, you would probably find all these topics that I would be covering today very familiar. And if you have a technical background and you already have a business degree over it, then most of the topics would be very familiar. However, from a hands-on perspective, from a corporate perspective, I'll be talking about a lot of other things that you would be learning as you progress through in the corporate world. So the best part about Acumen is it's treated as the principle behind the iceberg model, where you have your acumen hidden that needs to be explored, that needs to be exploited. And if you see those lacking, or if somebody says you based on your interview or based on your test that they give you, or based on the score, the assessment, then you are to know that these skills are learnable. You can have them infused with the right type of training. So with that, we would move on. And once again, I'm starting out with business acumen listed as a competency. The reason why I'm showing you as a competency is to know that there are so many things that involves in today's topic. So whatever you can, you will be presented with, and then you will have to build on it as a lifelong journey. So if you look at business acumen, once again, as a competency, it has multi-levels, 3-4 levels, and there are a lot of things in each level that it's very difficult to go through. But if you are at the topmost level of a manager or a director or the head of an organization, a principal, then you are to have the number 4 qualities of business acumen. These are all indicators of top-notch leaders. You can find this document anywhere on the internet if you would like to look at it in detail. It might also be on the information that's available on the LMS. Now, for those of you who are in the HR area, the human resources societies have also explained it, have defined it in different manner, where you can see organizations, vision, mission, goals. So a lot of strategic terms that are used here, a lot of financial terms, a lot of critical terms relating to business environment, relating to culture, relating to the vision of the organization, as well as the strategy that's being implemented. So it's metaphysical, if you want to call it. Then there is professional HR competency framework. This is about how business acumen is seen by different organizations. It's something that you need to have for sure. The other way of looking at it is as a strategic positioner. Okay, so it would be more of a strategic area than operational area. Okay, so it would be always you will be always up from your unit level, from your specialist position to a managerial position, and so far to a functional and strategic. So this is just about a background on acumen. So we'll start out with our slides and touch the topics that we need to. So this is an area where you have to access external market. Objectives here is to have a grip on understanding the risk management strategies, okay? Or the risk is a component of business that comes in all different areas. If you are a project manager, you know the importance of risk management, okay? If you are a technical director, you have certain risk involved. If you are a financial analyst, then there is risk, and there is internal and external risk. So you need to have a good understanding of what the risk is. You don't need to be certified as a risk management professional. However, you need to have an understanding of the risk relating to your industry, relating to your organization, and relating to the threats, and how to mitigate it. That's all. You just need to have an understanding of risk. For most other, for IT or technical engineering graduates, I'm sure there is nothing about risk covered in their coursework during their schooling days. And it's actually a drawback, but that's not the case with other countries, and some countries, and versus other countries. So too much technical, will keep you oblivious of the management strategies, the business principles, and the business 101. But in other areas, people are are being familiar with accounting principles, and cash flows and so forth. So we have three major areas here. One is risk in the management area, and strategy, which is an overall blanket coverage, and then financial terms. This is, um, a major part of ACUMEN, where you need to be familiar with the financial terms. So if you have a degree in finance, you already are familiar with it. But if you don't have a degree in finance, all you have to do is get an understanding of the basic things. And if you read any high level, administrative or those newer topics like the 10 top skills that the CEOs have, or the 15 good habits of the CEOs, something like that, you'll run into a lot of these financial ratios that you have to, and it won't take long for you all to get a grip. So depending on your position in the corporate scene, where you are or where you want to be, you have to get yourself familiar with these terms. So we'll start out with looking at what's in a big picture. It starts out with finance. It starts out with strategy. It starts out with decision making. This is all throughout. All right. Most of you may have heard of the term strategy, of course, but really having a grip on strategy and trying to understand the way strategy is implemented in the corporate world is very important. So strategy can be defined as a profitable action, and it means a lot for the people in the marketing department, but it also means a lot to somebody in finance. And then it also means a lot to somebody who's in the HR. So with strategy, you have to understand that it's the common language where everything that an organization does, from a unit level to the topmost level, any action that he takes, any statement that he gives out, any mission that the organization undertakes, and any project that's delivered will always have to be in accordance with the organizational strategy. Okay, so anything that a company does will have to have itself aligned with the corporate strategy. Now this sounds like a difficult task, but if you have a strategy that's clearly defined, then it's not anything that you can miss. But there are many organizations who are being very profitable and have no idea what their own strategy is. All right, so I wouldn't be surprised. Strategy is also relatively a newer term. With the advent of social media and the internet, strategy became very popular. But there were organizations that had strategy, and there were organizations that exist without any strategy. And there are organizations that do mishaps relating to strategy. And there are organizations who are going in a certain direction and suddenly make a turn without giving any regard to their strategy. So whether it's a services organization, whether it's a hospital or a political arena, you always need to have a strategy. That's how important it is. So it's time for you all to understand what your business strategy is, what your organization strategy is, and what do you focus on, and how would you stick to your strategy. So you would have to be familiarize yourself with strategic docs, which means that the financial statements, the balance sheet, and then even more would be the company's mission and the company's vision. You would have to see how the mission of an organization is taken and cut into pieces and thrown everywhere in the strategy. So when somebody looks at the strategy and how the strategy is implemented and how the strategy is in reality working out, then with a keen vision, you would very clearly be able to understand what this organization stands for, because it will have its mission and vision pop up in its strategy implementation, which means that if there is an organization doing certain thing on the field in a certain way, people will know that this is an organization that's geared towards the social responsibility. So this way you will understand that this is an organization which is doing a lot of social work. That's because that's their strategy. And immediately with that, the name of the organization will come to your mind. Okay. So if you see a lot of philanthropical work going on in third world countries in Africa, you will have an idea that it's probably Microsoft behind this company, this project. Okay. So that's how strategy, dictates terms. That was just an example. So with business acumen in the world of understanding the big picture, you would have to, first of all, take a look at more of long-term interactions as opposed to short. Okay, short-term interactions is very simple and very visible. When you treat a customer in such a manner that you make sure that he will never come back to you, right? And you make sure that he's not going to come back to you, you're done with him. Or you had enough business, or you kill him with the first deal, you charge him so much that he's never going to come back to you, then that's a short-term action, or that's a short-term interaction. It's building relationship, versus killing relationships. So if you have a strategic vision, if you are with an acumen, then you would not kill the person the first time. Forget the kill. You will treat him so well and actually end up taking a loss in order to build a long-term relationship. But this is the most important thing in the big picture. You have to make sure you have created a long-term relationship. And it might take more than what you can afford to set up a long-term relationship. How does long-term relationship help? It helps you, in valuing yourself. It helps you in expecting the customer loyalty. And it helps you having a customer come back to you and refer, and the word of mouth. So this is the first thing that you would look at when you are trying to access an external market, that you always look at the long-term relationship. But there are many organizations that live on short-term relationships. I really pity them. It's not because that they don't want to do it, but they have no idea how to handle this. Okay, you can see it from a very small petty business to an organization, that's making a lot of money, and they make sure that you won't come back to them. So they make sure that your competitor, gets the benefit. And what is the proof that you have built a long-term relationship? You'll get a feedback. I talked about feedback, in the past, saying that it's ubiquitous. Feedback is ubiquitous, which means that it's always present. I think I just talked in last week. So for those of you who remember, I wanted you all to check out a 30-second video. I'm forgetting the name of the management guru who said feedback is ubiquitous. But if you type it, you will find it. So basically, you need a feedback, and it has to be a constructive feedback, criticizing you. And it has to be a receptive feedback, and it has to be reciprocal. So there are many ways of looking at what a feedback is. But you make sure you get a feedback, ask for a feedback, be honest with the feedback. And as long as you're asking for a feedback, you know that you are in for the value. You're offering value, your product is value packed, and so forth. So that's about how you would understand the big picture. And relating to the big picture, we would look at how we would develop growth opportunities. So when it comes to recognizing the opportunities, identify the market trends, actively research customer needs, pay attention to competitors. What it means here is, as you are on a quest to improve your business, you are to do all the due diligence. You have to come up with critical thinking. You have to come up with evaluating your plans, re-evaluating your plans. All the business tricks that you have to do here in spending time would have to be analyzed, would have to be reanalyzed, and would have to be properly implemented. So this will help you identify the market trends, which are trying to find out what the competition is doing, trying to find out how the product is viewed, trying to find out if there are any threats, trying to find out if there is a similar product that where the price suddenly went down, because this changes the scenario. So basically, how you would treat the customer and how you would pay attention to your competition. There is a saying, if you take care of your customers, the customers will take care of you, or the business will take care of you. So I don't have to say much about customer service, but it is the most important aspect of business acumen, having the right acumen. And it is seldom paid attention. It is seldom that an organization will pay extra, efforts or extra cost, extra time towards the customer. This is the most important thing, and sky is the limit. If the customer asks you something that you have to go out of space to get it, you would have to say yes. This is how important it is. Some very interesting cases in the service industry. If you want to understand what customer satisfaction is, what guaranteed customer satisfaction is, and what money back guarantee is. So in some parts of the world, marketers or the retailer, they don't even know what money back guarantee is. But if you buy a box of candies and you take it home, eat it, and you don't like the taste, take it back to them and saying that I don't like the taste, they will take it back with a full refund. That's the level of customer satisfaction you need to build on to expect the loyalty. I hope the example was clear. It happens, and sometimes it don't happen. But this is what you would have to be geared towards to having the right acumen. Decision making is the most important aspect here. You have to be mindful of decisions. Now, there is a term called split-second decision making. This is based on the autonomy or the autonomous power that you employ within your employees. So decision making has to be quick, would have to be mindful. It cannot be just, out of a gut feeling, but it has to be, properly studied. However, decision making, would have to be in the moment, which means that you have to have many a times the power to make the decision given out to your employees. And this is how a business progresses. There is a company called NICOR, N-I-C-O-R, that you can look it up and see how the decision making was decentralized in that as an example. So within the big picture, everything is related. Be comprehensive, be balanced, be incorporated. What it means here is if you have a defect in your product, how it will affect your sales. And when the sales are affected, and how the after sales are affected. So this is to have an idea how everything is integrated in the world of business. This is a part of the acumen. All right, let's take a look at the big picture.
Angela had to decide which direction to take the company to improve the profit margins over time. She could invest in employee training to improve customer service, or she could cut labor further to save money. Cutting labor would fix the problem immediately, but she was not sure it was the right decision. Every time she thought about cutting labor, she became nauseated. After careful consideration, Angela realized that she felt cutting the labor went against her mission to treat all employees as valued team members. After gathering data, she learned that sales began to dip when customer service complaints increased. Additionally, there was employee interest in a training program. Her intuition told her that implementing a training program would increase long-term profits.
All right, take a look at this slide, what Angela did. In most cases, what you do is, I know it's common notion, to cut something to reap something. So what they would like to do is either cut the employee cost relating to training or their salaries. And then they would think that this will actually impact their margin, their bottom line, but that's not. So in decision making, you go by intuition. You have employees, you had a trusted employee for 5 years. Now you want him to let go. Now, how would be your feeling? She was nauseated, which means that she was not feeling well. So she had an intuition, her gut feeling saying that, no, I shouldn't be doing this, or I should be doing something else. So this is, your feelings versus, what you want to do when it comes to cutting on labor. This is, something that's related. When I said everything is related,
Angela,
this is what you would go. All right, we're gonna move on after the big picture. Let's look at a very important topic known as KPIs. For those of you who are not in business finance, this is probably a new term. But by business acumen, what I mean here is you have to get yourself familiarized with KPI, what KPI stands for, and what the KPIs are relating to your project, your department, and your business. All right, for those of you who are not in the marketing business, who are having a strict technical background, the first skill that you need to learn as having your right acumen is to understand what a KPI is. So it's key performance indicators. These are known as vital few as opposed to many useful, which means that these are the few indicators of your business that you have to pay attention as opposed to the many other useful indicators. So these are metrics, these are measurable, these are quantitative, these are qualitative. And then you would have to get yourself, first of all, inquired as to what your job entails when it comes to KPI. So if your job description or if your position relates to employee retention, then that's your KPI, and you have to make sure people don't leave your company, otherwise you're responsible. In the marketing term, there is a term known as known value item, KVI. So when you go shopping, you will see on the brochures the price of milk, the price of rice, and the price of bananas, for example. These are known value items. And that's what the retailers keep on the top to sell you their service. So the same way, KPIs are, quantitative, qualitative metrics that relate to your bottom line. And you have to have an idea about how the KPIs are measured, how the KPIs are designed, and how the KPIs relate to your position. There are hundreds and hundreds of KPIs, just like the indicators of economy. There are hundreds of indicators of economy. There are many, many KPIs that you have to relate on. You have to learn how they would be designed and how they would matter. It's decisiveness. It's based on how you would, decide as to which KPI is important. For example, if you were to set up a framework to design KPI, you will have to look at the way it's described, and most importantly, how this relates to the performance and goals. So you would have to define the area that you would have to look at as to how the performance is measured. And then you have to identify the criteria and you have to measure. For example, I talked about employee retention. So you'd have to look at how many employees you were able to retain in the first quarter of this year. If the number is up, relating to last quarter, then you're doing good with the KPI. It could be many things. It could be in sales. It could be in profit. It could be relating to, any operational areas. Now you have to remember that KPIs relate more to the operational areas, the bottom line, not the strategic areas. And as an example would be something how you would be able to, initiate and work on it and take it all the way further. So this is what we're concerned about when it comes to KPI, how we would handle it on a day-to-day basis. How would we handle it now? How would we land? And the example that I want to give is the cockpit of a pilot. So if you have had a chance to visit the cockpit where the pilots and the co-pilots sit, in front of them, if it's a Boeing 737, you'll see hundreds and hundreds of indicators relating to the system, the machine. And then it would be very impressive to see how they monitor all these 100, indicators, starting from pressure, to everything else. But you have to understand that among those many useful indicators, there are a vital few indicators that the pilot is always focused about, maybe 5, 6, or 10. And that's what keeps the plane going, okay? And that's how you would land. So you have to look at the day-to-day activities when it comes to KPIs. And the first way you would design is based on decisiveness. The second is flexible, okay? These are relating to the performance, okay, of an organization or of a specific activity when the goals are met, okay? So when the goals change, you will change the KPI. For example, if there is a product in the market and suddenly the price has dropped, you can look at, an example, perfect example would be Nokia. Whenever Nokia products came out, the price went down. Why? Because they were not selling, there was a competition. So although Nokia had a niche, but its products always went down in the price. So people who bought the product in the first few weeks or the months of its launch paid twice, too many compared to the price of the Nokia product phone, for example, that went down. So they had to be flexible with their KPI. They changed the KPI down from a profit margin of 50% to maybe 25%. So it would have to be flexible. When the goal changes, you would have to review, and buy-in is very important. Whenever you have a KPI, you have to make sure all the stakeholders have had it approved. Okay. And then the next one is initiative. Okay. Initiative is a task you're willing to take that does not exist and that's profitable to your business. It's very common in the corporate world to say, I love initiatives, right? You hear, I love initiatives. So what is initiative? Is relating to a performance that you are trying to meet or exceed. So this has, its root linked to the KPI. So the KPI will tell whether the initiative is working or not. So how would you have a strong initiative? Look for solutions, not problems. Offer to fill in when gaps occur, learn from the mistakes. In business acumen, you always have to be honest. You always have to be admitting your mistakes. You always have to be learning from your mistakes. So as a business, as a professional having acumen, you always have to set up a process of inquiry and you have to learn your way through, which means that anything that you do might go down the drain. But remember, there is never a project or initiative that you took that went down the drain and you did not learn from it. Okay, so this is how you would look at. Sometimes you win and sometimes you learn. All right, let's look at KPI now.
Lee needed to increase customer satisfaction. He planned a customer survey initiative to improve service. He decided to start small and set a target of 10% improvement over the course of a month without talking to stakeholders or consulting data. The metric established was total complaints to customer service. The key performance indicators targets were inflexible and established without employee buy-in. After a month, customer complaints to customer service dropped 7%. However, the feedback on customer surveys indicated that many were still unsatisfied.
All right, this is what the case is about. Since it's a short case, I have these, the main points written here if you can read it. One KPI was customer satisfaction. So you can say he derived it by saying number of calls divided by total calls. Okay, whatever the number came was the percentage. And he planned a survey, to improve. And the metrics was total complaints to customer service. And it dropped to 7%. Now, in the beginning, he forgot to have a buy-in, which meant that he forgot to ask his coworkers or his employees. He didn't get the buy-in. So if you do anything in the corporate world without the buy-in, then you would be in trouble. So anytime you have a new project, you always have to give it to your superiors and get their approval. That's all it is. All right, so here we're going to talk about the risk management strategies. Okay, this is a very, very broad topic. And for those of you who are project management professionals, they have a newer brand in there known as risk management, RMP, something like that. But anyway, risk is, a factor that always needs to be mitigated. It needs to be identified. It needs to be assessed. And then it needs to be monitored and mitigated based on the levels. And sometimes the risk is zero, and sometimes the risk is high, and you have to change courses. So risk management strategies doesn't entail to any regulatory body. Okay, it doesn't mean that you are a risk management certified professional, you understand risk. Risk is everywhere. Risk is with employees. Risk is a dysfunctional team, which is nowhere written down. You can't even calculate in metrics. Risk is related to the feelings, to your emotion. So you just have to be very savvy about risk. It starts out by identifying risk, okay, trying to assess risk, how much risk is involved, and then trying to monitor it so you can see how you can bring it down. That's all risk is about. In your own areas, in your own department, study, or try to have an idea where the risk factors are. Based on your experience, you need to know, you already know where the risk factors are. And that's how you would try to analyze, that's how you try to monitor and mitigate. So there has to be a continuous assessment. As you can see, objectives, related to objectives, potential, triggers, and the level of tolerance. and the probability and impact of risk and the responses for risk. You would like to know how you would cut the risk, and you would like to know how much variance you can have risk. I heard a bell ring. I don't know what that is. Moderator, please look into it. All right. So when it comes to risk, there are internal and external risk. Internal risk is relating to your company that you can maybe source it well. External risk is not in your hands. For example, if you are in the finance area and you have your internal risk as cash flows and anything relating to employee capabilities, employee contributions. And then if there is no money, if the profits are down, then that's a problem. So you have to look into the area. Same way, there are some risks that's beyond your environmental, organizational environment. Those are taxes and supplies. For example, taxes, the government raises the taxes and lowers it. So if the taxes are raised, as we can see now, this is the time where this is the, era where the taxes have been going up and the income has been going down. So that's an external factor. Another example of an external factor will be the currency rate. If you're dealing with a lot of international products, services, then once the currency rate goes up or down, the exchange rate, then that poses as a strong risk factor. That is external. So that was an example. So how would you make adjustments and corrections? As a part of your risk strategy, you would always have to be very, very, flexible and very, very sensitive about making adjustments and corrections. So if there is a threat in the outside environment where, for example, your competitor did something, how would you manage it? You would have to adjust your price. You would have to increase the price. You would have to manage the risk. An example would be Burger King and McDonald's. They always play around, with their goals and with their objectives relating to correction. So when McDonald's lowers the price to its Big Mac to 99 cents, for example, so does Burger King right away. Or if there is an adjustment on the price with the fish fillet, it would immediately be impacted and taken care of by the other. So there is competition. In the free capitalistic world, there is competition, and it's a free world based on supply and demand. So this is how you would monitor constantly and then come up with your strategy, whether you would be willing to take the risk or not. That was an example of monitoring. Knowing when to pull the trigger. Okay, what this means is when a strategy is working, you would want to go on investing your time and efforts. When a strategy is not ineffective, you would put the plug. So you have to allocate resources based on how the indicators are working, and at the same way, you would have to take the risk of rolling in a project if it's worth it. So based on your customer survey, if you think that this is something the customers want, this is a new product that the customer will want in this specific area, in this specific crisis, then it would be worth taking the risk. That's what it means when we say it's worth taking the risk.
Kay created a financial risk strategy for her young company. Her objective was to increase profits, and she examined the cash flow and liquidity of the organization in her assessment. She created a strategy based solely on this information, but after careful monitoring, she realized that the strategy was unsuccessful. The interest rate changed, and her actions had not compensated for the difference. She chose to make adjustments using the external and internal factors to guide her assessment. After 3 months, her strategy began to pay off.
All right, strategy and risk go hand in hand. And this is where you really have to build your skills, trying to understand strategy and risk factor. You don't want to be too risk averse if your strategy is not. And you don't want to be too risk friendly if your strategy is on the other side. So build on your skills with a very, very strong understanding of the strategy. It's a major topic, okay? And there are experts who understand strategy, but you just have to, know it measures with risk. So that was how you would monitor external, internal factors. You can't just improve the profits. All right, the next aspect in business acumen is what we have been doing all throughout, what I have been stressing, recognizing learning events. It's not like reading or taking up, learning or being on a lifelong journey to learn, but it's actually recognizing the events. So in this manner, you guys have the acumen that's needed because you are today with me, you have recognized this learning event encounter and you have grabbed it by signing up and you are there with me today. So I'm going to have to say that you all have the acumen that's needed in this aspect of getting on the learning event. Learning is the best part of business, setup. Learning is the best part for you as a human being. Learning is the best thing. I can't say enough about, learning because I've always, brought it up. And then here, the aspect of learning is recognizing it. How would you do it? Many ways of doing it. One is the webinar that we're doing. The other one is reading whatever comes your way. Imitation. When was the last time I said imitation is good when it comes to getting on the English conversation, the accent? So imitation is not a bad thing, although it has a reputation when it comes to imitation jewelry or imitation products. But it's okay, it works out well. So you be sure to imitate, okay, when it comes to your business or your acumen. Exercise, practice, which is exercise. Experiment, possible outcome. We have some exercises that you can try. Interaction, okay. Now, interaction is a term that we talked about in emotional, area, in empathy, in time management, but, you really have to understand what interaction is. It's more than action. There's a very a very funny story where three people are stuck in a, to emphasize interaction, stuck in a treasure island, and they get bored talking to each other. Among the three, one was a guy who would love to interact. As you can see, there's always one character who would be boring but would be interacting. So they all prayed to be taken, for a miracle to be out of this island that they are stuck in. And then their prayers were answered when suddenly, a bottle came rolling down their way from the sea, and then there was a genie in there who said that your wish will be granted and ask for one, each of you. The first one wanted to be gone and be with his family. And the second one said that I would like to be somewhere in Central Park area in the city of New York. And then his wish was granted, he was gone. When the turn for the third guy came in about what his wish is, where he would like to go, he said, I'm getting bored. I like interaction. Get these two guys back in. And both of them came back. And this is how you have to be obsessed with interaction. If you all got, what I meant from this story. So interaction is of value, okay? You would have to learn how to interact. And this would be the best way to exhibit and apply your soft knowledge. Decision making, how would you learn from your decisions? Well, if your decision went wrong, you have learned it, right? And you learn mostly from your mistakes. If you do something right, there's nothing there to learn. You already know how to do it. But if you miss it and if you make a mistake, and that's when you would learn. So in systems thinking, errors of commission and omission are very important. You have to be able to appreciate the errors and how you make errors and how you learn from it. And once you have learned from your mistake, it's known as learning the hard way, which means that you will never forget. Other learning opportunities, take a look at how you would identify the problem. Learning opportunities from problems. Solutions, make a decision. Case studies, okay? Case studies tells you what went wrong and how you would have best analyzed it. And then when it comes to learning abilities, try to extract your blind spots, okay? These are spots hidden in your self as a talent that has not been banked. So how would you bring up with it? You would have to request a feedback. You would have to reflect, Study your own self. So that was about the learning opportunities.
Craig felt like he was running in circles at work. He was always putting out fires that came from his past decisions. He was not sure why he kept making mistake after mistake and faced problem after problem. As a result, the first few hours of each workday were unproductive. They were devoted to handling problems that should have already been addressed in the decision-making process. Finally, he decided to break the vicious cycle. He examined his past decisions and identified a repeated pattern of poor communication in his planning. Craig chose to learn from this mistake and alter the pattern. After taking advantage of his knowledge, he faced fewer difficulties and gained back precious hours in his workday.
All right, so if you feel that you are going back and forth every day in your workday with, with some, mistakes relating to your pattern of work or your organizational state, that you really have to, study, learn from your mistakes, ask, get a feedback, be honest about it. So it has a lot to do with being honest, getting a feedback, and trying to admit your own mistakes. So he's saving 2 to 3 hours of his workday. Now, in business, some of the answers that you need to know, although it's very easy to get answers to anything that you need in the internet age we live in, but there are something very, very important that you have to know as to why you're coming every day to work on time and why would you do. So if you are in a position and if you have no idea how your position, your job description, and your responsibility impact the bottom line, then you are in a dark spot. You need to really get an idea about how your company runs based on your. So this will actually give you the authority, the power to understand that your contributions are of value. So I don't need to tell you how to do this. Whatever you're doing, you need to examine yourself. If you are a product seeker, you have to understand, how this helps. If you are providing service, you have to know how to improve your service and then how you would influence the bottom line. So these are the questions to be answered. Do you know what the last year's sales were for your company? Well, if it's a big company, it's very easily available on the internet. If it's a small company, you have to go ask, okay? So if you were to know that your sales were like, say, a few 100,000 or a few 100 million, then you know where your company stands, okay? But sales doesn't mean anything. It doesn't mean that's how much money you're making, okay? Because there are cost of goods sold that you have to direct. So you have to get an idea into having a grip on the financial aspect of your company or the financials. And this will take us to understanding the ratios, okay, the financial ratios. So if you know what a profit margin is, then you probably know what your net profit is. So most organizations, it seems, have a net profit of 13%, but I don't agree to that. There are companies who make more than 30%. There are companies who make, a lot more than that. So what would be the profit dependent upon? The first one is COGS. They call it COGS, cost of goods sold. This is the price that you pay for your raw material, okay, or for your inventory, or for your labor, to have your product or services, distributed or readied. And then there are operating expenses. I'm sure you all understand what operating expenses are, payroll. And in the end, there are interest and taxes from the other side. Taxes, as you know, is an external factor. Interest too is based on the loans. If you have a coverage to service, and if you have a high interest paying loan, then you're better off being equity sensitive as opposed to being a liability sensitive organization. So you would have to build on your financials. There are very, very readily available handy guides that talk about the basics of finance that you did if you don't have a background. And you have to get into not just understanding what a profit margin is, what a gross profit is, or what the expenses are, but also an idea about how to calculate some basic ratios, right? Like the return on investment and so forth. For anything that you do, even if you are a small business provider or a service provider, you need to know what your return of investment is. All right, let's look at the business skills here.
Shelley's printing company had a profit margin of 7%, down 2% from the previous year. She decided to improve her finances by cutting costs. She began by negotiating with her vendors, which saved her a decent amount of money. She also cut labor in half. Customers complained about longer wait times, and her long-term employees soon found jobs elsewhere. This required her to hire and train new employees. By the next year, her profit margin was unchanged.
All right. It's usually the case when you want to increase the profits, what do? You would cut cost, okay, but that would impact. So you really have to look at the big picture, how your trusted employees were let go and you had to hire new people. And then you had to, train them, spending more money. So there was no change in the bottom line. Now, as a general rule, always remember that whatever service you have going on, whatever provider you have, distributor, or the technical consultant that you have, don't change them, because when you change with an intent to cut your costs, chances are there would not be any change, because you would be spending more time and efforts getting a new person on board, although he might be cheaper, but it would work out to be more expensive in the long run. So whenever there is a change in service or the service provider, you have to remember this basic rule. All right, so you have to be illiterate in financial. With those simple questions answered, you have to move up. Those are not enough. Unfortunately, you need to build on more in any area of business you are in. Whether you are on the technical side or a senior manager, you need to have a good grip on some of the financial terms. The first one is asset. Of course, you know what assets are, but there's a little bit of in-depth work that you need to get into assets. So it could be anything of value. Okay, it's something creates a profit. Use cash to invest in other assets, but the other assets that's not written down on your books, your financial statements, or your balance sheet is the other soft assets, which are like the knowledge and skills, okay, and your employees, who are known as a human capital these days. It's the best asset that you have. So you have to have a good understanding about the financial assets, which are liquid, which are not liquid, which are adding value by increasing the profits, and which are only increasing the production. So some assets work towards productivity, and some assets work towards investments and values in the profit. So some ratios that you need to learn on is ROA, return on assets. Inventory, this is a big area. The leader in inventory management is Dell Computers, okay? So if I were to ask you if you need to have a big inventory or a small inventory, chances are you would say, I would need a big inventory. No, that's a big cost, inventory holding cost. So Dell became a world leader in computer making, not manufacturing, because people think that Dell is a computer manufacturer. No, he's nothing, he's nobody. But he's an expert in inventory management when it comes to, dealing with computers. And he was in big trouble during 9/11, 2001, when, the flights and then everything was shut down. And he had to incur a lot of cost, because everything that he did was on a very smart inventory management system, and the goods used to be transported, on the click of an order. Anyway, for those of you interested in understanding inventory, Dell would be the case study. And then the revenue, this year's revenues, last year's revenue. This is gross revenue. So get everything that you can on the financial side. What are liabilities? Money that's owed. Is that good to have? No, it's not. So this is the money owed. This is the money that you're paying. That is the money you have borrowed. And this is the money that you have mortgaged. This is the amount that you have mortgaged. So it talks about the financial health. The higher the liabilities, the bad your health. And it could be short term that could be paid off, or a 30-year, liability. And then having low liabilities will give you an equity, which is the best part of your business. I hope you all understand what equity is. This is the lifeblood of any organization. This is how organizations, express themselves, okay? And then when you invest in an equity stock, as you call it, you're buying a stock in an equity company, it means that they are equity sensitive, which means that they have given out a lot of shareholder value. They have issued stocks to increase the equity. Okay, they haven't issued bonds because bonds will increase their debt, because bond is an instrument that needs to be paid off. But equity is like an ownership where you don't need to pay it off as long as you want. So these are the terms that you have to familiarize yourself. Let's look at this.
Tim was considering a small business loan to purchase new equipment for his company. He estimated that the equipment would improve productivity by 10%. His total liquid assets equaled $100,000. His total liabilities were $85,000. He was not sure if he had the equity for the 5-year loan that he was hoping for, but he filled out the application. The loan amount that he applied for was $25,000.
All right. There is a term called loan to value. When you need to get a loan, they look at how much your loan is to the value. So if you're getting a loan on your equipment, you have to make sure that you have certain equity, which means that you are putting in your own money. Just like you buy a house, you put in 25%, 30%. So that's your equity in the house from day one. But there are projects that are offering you loans at 5%, 10% too. In the United States, if you want to open an airliner, it's very easy to do it. All you have to do is put down 10, 20%. And that's how companies get bankrupt. Okay, it's the way you look at it. It's how you play the sensitivity aspect of the financials. How you can play around with it and get yourself moving. But then the risk factor will be very high when your company is liability sensitive. Some additional terms is you have to familiarize yourself with income statement. This is known as a motion picture as opposed to a balance sheet. It talks about a lot of things. You know, what your net profit is based on your revenues and your cost. You get your gross profit and you subtract from the gross profit your expenses, and that gets your net income after taxes. And then if you are a public company, you issue EPS, okay, per share, and then earnings per share will decide, what each individual shareholder is getting. So this is on the corporate equity side. The next document that you would have to be able to read, very important, is balance sheet. Absolutely. That talks about the whole picture. It is known as a snapshot at one certain point. At any point in time, your balance sheet talks about what the company's financial health is. So it's about current assets and total assets. Anything that's liquid can be liquefied within a year, will be included in current assets. Then you have short-term liabilities and long-term liabilities. That comprises to be total liabilities. And what's left is the shareholders' equity. So in case of liquidation, when the company is bankrupt, the assets are sold, and then the value salvaged from the assets will be given to the shareholders, after which, the money salvaged would be given to the creditors, after which whatever is left is given to the stakeholders or shareholders or stakeholders. So this is how it works. When you set up a business using public money and you have debt, then the debt is paid, after which the money will go to the public. We have many, many big mishaps in the corporate world where companies went down because they didn't have a good grip on their finance. And then Satyam Computers back then, it was basically these finances that you have to remember, in addition to their unethical practices. Then there's a cash flow statement. It talks about how the cash is generated and how you would use the cash. Then there is projections. I don't have it here. Then there is cash flow projection, where you project the future cash flows for presenting. These are theoretical based on actuals. Read, and the force is with you. I don't have to say what do you need to read. Read periodicals, trade publications, blogs. This is more than your text that you have studied in the past. So anything that you read in the newspaper is current. Anything that you read in professional magazines and trade pubs. And I gave you some examples. Start with the Wall Street Journal. It's the best, read that you can in business. And it has sections: finance, business marketing, social economy, and, other areas too. And then Harvard Business Review specifically for business cases.
Bree prepared her balance sheet at the end of the quarter. Looking at current information, she had $10,000 in equity. She considered the equity healthy, but she did not compare it to previous statements. The following quarter, her accountant prepared a balance sheet statement that included balance sheets from the previous 2 quarters. Bree realized that her equity had been falling. It was currently $8,500.
All right, this is about understanding your balance sheet and how it impacts. There are a lot of terms in there, depreciation factor. So for those of you who don't have a business major, it's very important that you all understand some of these things. All right, business acumen in management. This is a very broad topic again, but you have to understand what management is. Management is best defined as the art of getting things done. You do have to understand it's not doing it, but getting things done. This is the art of getting things done. So how would you get things done? You would have to have the right people, the right resource, the right human capital. So how would you, the first question, the way we would do it is through talent management. What is talent management? It is about not just managing your talent, but by investing in them, by empowering them, and by making them unique talent so that they have, a cross-functional and a top-notch knowledge-based resource. So this is about how you would manage talent as a manager. This is more than HR, because the HR will recruit the capital for you, and then how you take it is your management. So you'd have to really empower them. You have to really empower them, and you have to really invest in them to manage. These are the top qualities of managers, especially the top organizations. They make sure that you have talent management taken care of. And then that's one area. The second area is change management. As you all know, in today's world, nothing is constant except, the only constant thing is the change. So you would have to be prepared for the change. Many organizations who started out with typewriters have been, totally technology friendly and, high tech. Why? Because they embrace change. Okay. Very senior managers who started out back then when there was no internet are, tech savvy, internet savvy, because they managed to adapt. So the same way you would, be willing to bring in technology and then adopt it and implement it. So there are facilities, there are vendors, there are, agents, change agents that will help you do it. But as long as you can understand, change management, and it's important, you have the needed acumen. Asset management is also a very specialized area, especially in the banking side, where the managers manage assets belonging to other companies, other corporations. So it's a very specialized field. In a business context, you have to make sure that you are managing your assets in a profitable manner. So you have to identify the assets and develop a plan. If you are an organization which is based on assets, and then if your profitability is based on assets, then you have to make sure you have allocated resources in such a way that the occupancy of your asset is optimal, which means that they have to be 100% occupied or busy or utilized. So that's about asset management. The next general topic is organizational management. This is nothing but who reports to who. Okay, this is structured from top down, and then it's very complicated. If you have the ERP application, you can check out the entire organizational hierarchy structure, organizational structure for your company as to who reports to who. So this gives you an idea how you are aligned, how you are linked in, and how you are structured. So organizational management is also an area of business that you have to pay attention and learn. All right.
Angela decided to update the IT system of her company. She was sure that her employees would be thrilled with an easier-to-manage point-of-sale system and other technological advances. Angela sent out a memo with the date of change, and she was surprised by the reaction. No one seemed excited, and some employees vocally complained. Still, she was certain they would embrace the change quickly. 1 month after the change was made, productivity dropped by 7%.
All right, for change management, you have to always seek the approval. Okay, you cannot surprise people, your employees, your team with the change, and you need to have the proper buy-in. That's the skill you need to bring about or to implement change. All right, critical thinking in business. This is thinking outside the box. This starts out with asking the right questions, assumptions, exploring perspectives, examining evidences, different implications. So this tells you what? That this is more of a emotional area where you have to understand where everyone is coming from. And most importantly, your perspective of the business, of the project, of the chain may not be same or may differ from the other perspective. So everyone's guilty of having their own perspective. So you would have to examine, the basis as to how, the perspective is taken. One check or one control mechanism on this one is to make sure you get your questions answered, which means that if you're sitting in a room trying to talk about a new project, initiation, change, or implementation of a project, or a new idea, then you have to make sure that before the meeting ends, everyone in the team or everyone in the room has a consensus. This is the hallmark of top leaders. So don't leave the room with 80% approval or 90% approval or even 95% approval with one team member offended, with one team member not given the due regard, or one team member unhappy. It's one, but makes a whole lot of a difference. So the hallmark of the right leader is to have a consensus, 100%. And then you have to play around with the data in critical thinking. You have to make sure you organize the data. If you have to analyze 5 papers, 5 project reports, then you have to analyze it. And once you analyze it and you read it back and forth on and on, then you would be able to imagine, or you'll be able to see a trend. So trend analysis is the best way to conclude organizing data. I remember the last minute email or the email at 5 o'clock when we talked about strategic email. These relates to the reports that you analyze, and then you look at the trend. And once a trend is visible, then it's so very easy to analyze the trend and to conclude. So the data has to be organized either virtually or physically. So as a part of the analysis, you would evaluate the information, you would decide facts or opinions. Biases has to be totally taken care of. When it comes to a consensus, you have to make sure the consensus was met. And if the consensus is there, then there is no chance for a biased decision or a biased view. So intuition, gut feelings, all these things are a part of critical analysis. And how would you ultimately make the decision? You would look at the results and see how the decision will impact and the options available. When it comes to implementing or when it comes to announcing a decision, there are a lot of factors in there that you have to make sure. So based on your work, groundwork, from organizing data to critical analysis, the consensus, and not having any bias, the result would be foolproof, which means that it would be taken care of all different ways. There wouldn't be any options left that you have uncovered, and you have also checked the feelings of your own self and the employees. So that's how you would make a decision.
Doug was considering joining forces with a startup. The company was exciting, and there was a good chance that it would be profitable. The preliminary data and financial statements were positive, and Doug was leaning toward accepting the offer. One day he read a negative expose of the startup written by the startup's competitor. The article made Doug nervous, and he decided that he would not go through with the business deal.
All right, so you would cross-check, check references, check what's on the internet before you decide or make a decision. Sometimes, the world is full of defaulters. The world is full of characters, so you have to make sure you do your due diligence. All right, we have lastly key financial levers. How would you get the financial leverage is very important. How would you be able to gain, an upper hand? How would you be able to, analyze optimal incomes with minimal investments or with mitigating risk, with a considerable focus. So these are what the financial leverages are. How would you gain leverage? So the first and foremost is investing in people. Okay, a lot of people ask a question as to why we would invest in people. What if we invest in them and they leave us? Okay, that's not how an organization would look at, because we have two areas when it comes to investing in people. One is your own employees, and the other one is your customers, which is your product, relating to your product and services. One way to analyze how investing in people would make sense is to familiarize yourself with the term opportunity cost. I'm sure you all are familiar with opportunity cost. So it's a cost, it's a monetary cost, but it also includes the cost of the value. Okay, so say you are to invest in your employees because the sales are going down. So what is the opportunity cost of not investing in your employees, not providing them the training? So opportunity cost can be defined as the cost of the next best alternative. So if you were not to do this, what would be the cost? So you would compare it. So if the sales are dipping, then you will see how much it would cost for my employees to get a sales training. And then you would compare this with the cost of not spending the money on the employees training, which means that the loss. So sometimes the losses could be huge. So you want to make sure that you have taken care of the opportunity cost. Anytime you invest in people, or anytime you have an area where you can take a leverage, look at the opportunity cost. It's a little confusing topic because it comes in economics. It's basically a macroeconomic issue, but it's very important to understand because that is a price that you would pay. I'll give you an example. Bill Gates, we started with Steve Jobs, so let's end with Bill Gates. What would have been his opportunity cost if he had continued with college and gotten a degree and maybe a good job? It would have been huge, right? So his next best alternate solution was, to not quit school, not drop out of college, but continue and not start Microsoft. So his opportunity cost would have been huge. I don't have to say much. So basically, we continue our ACUMEN with communication. You all have an idea what communication is. We spend so much time on it. And in here, but remember, truthful communication. Okay, so forget the body language and forget the listening skills, but try to have an honest, clear, and friendly communication. This is business acumen aspect of communication. Processes, of course, you all understand the processes, the importance of processes in business. They are, the basis for any encounter in business, any transaction that shapes into a project and that's being delivered. So make sure that you analyze the process, you evaluate it, and you look at the right processes, and then how the processes come up with the profits. And lastly, you have to make sure that your business goals are met. So with everything that we have been talking on, from the ratios to the strategy to the, big picture, never would you disregard about your business goals, okay? So without having any disregard for the business goals, you would be doing it, because that's the purpose you are. That's the purpose you exist. So it's like your strategy, it's like your financials, it's like your communication, it's like your opportunity cost. Everything is in shape as long as you are not disregarding your business goals.
The board of directors of Market Chain approved a plan to decrease labor spending and cut back on customer rewards to increase profit and liquidity. The company initially saved $5 million. After 6 months, however, turnover increased and sales began to fall. Turnover cost the company $3 million, and the estimated sales loss was also $3 million. The results of the information caused the board to reconsider their decision.
All right, that's one example of how you can leverage your employees. Turnover could cost you in millions, okay? So it's not good to have a high turnover. They saved 5 million, but in 6 months, they lost 3 million. So that's how turnover could be. This is a good example of how important employee is, how an employee should be treated as a human capital, okay? And the best source of competitive advantage. So that's about it on business acumen. Like I said, this was a survey course. However, you have been introduced to everything, and the purpose of a survey is to get a grip on it as you move on. So this is a lifelong journey that you would have to build on for business acumen, and your goal here is to get to the topmost position in management with the acumen. You already have the self and you already have the acumen. So with this, we would be ending our little off-track topics of stepping out of the soft skills, but we'll be back next week with a more concrete, soft area, which is be coaching and mentoring. And this is a very important topic. And as you can tell from the title that you have moved up from analysis position or from a technical position to a managerial position. You already have the skills, okay, and you have learned business acumen, and we'll try to move further up by learning from coaching and teaching from coaching. Like, in other words, delegating from coaching and having a coach yourself. So why would you want to have a coach, and how could you be a coach is what we would learn in our modules starting next week, coaching and mentoring. So that's about it. We're done on time, but we can extend it another few minutes for the question that you maybe have. Over to you, moderator, for the question.
Thank you. Thank you, Shah Saab, for today's session. It is such a pleasure to listen to you. We will start Q&A round now. So the first question is from Dr. Muhammad Khurshid Akhtar. The question is, for a startup company's entrepreneur, how he will experience business acumen skill before starting his business.
Well, if you are an entrepreneur, you're starting your own business, you already have your skills. One skill that you have is the way you have calculated risk in starting a new project. So the business will teach you. The topics that I have, you would try to work on it, build on it. And then as an entrepreneur, the best way to acquire acumen is to learn as you go, on-job training, which means that as you encounter a situation, a problem, a challenge, a hurdle, you would learn your way through. So this is how business entrepreneurs in general learn. And I started out with Steve Jobs saying that he had the best acumen. Where did he learn? Nowhere. He learned it on his way. So if you are an entrepreneur, you're starting your own project, you already have the acumen. Rest is assured. Next.
Thank you. So the next question is from Sahir Pizzadeh. By considering present scenario, which type of business needed to be started in Indian villages?
Repeat that. Present scenario, which type of business need to be started in Indian villages? Well, you have to have,
yes,
a product if you want to start a business, or a service. So depending on what your service is, you would go. But never, underestimate anything. Rural areas or urban areas, there's always scope. But, what you need to be having in yourself is the honesty, the hard work, the efforts, and, our holistic approach of sustainable development. So you would have to choose the business, and it has to be a social project where you can help the people, the impoverished, the underprivileged, the underprivileged, and whoever needs help. And that's the definition of fulfilling a sustainable goal. Next.
All right. So the next question is from Mr. Aftab Alam. How to build long-term business relationship?
Two things, pricing and service. keep your pricing straight, honest, and give the best service. So it's pricing and service.
Okay. So the next question is from Gyaneshwari. Can you please tell that how to promote our business fastly?
Okay. There's no magic answer to that rule, but same answer, service and pricing. These are the two things. The reason why I'm saying it so easily is because pricing relates to low cost strategy and service relates to a highly differentiated strategy. So these are the two things that will get you ahead. Low price, good service, high service. Okay, that's as simple as that. Next.
The next question is how to become an entrepreneur with low investment and make more profit.
Well, you know, when you're an entrepreneur, you don't look at the profit. Okay. So you start out with zero profit and you will achieve as an entrepreneur. Don't worry about the low investment, is fine, but forget the profit for now. Next.
All right. So the next question is from Tabassum Dhorijiwala. Assalamu alaikum. As you said, few things and skills have to be learned by by ourselves. But as a company asks for certification, then how a beginner should deal with it?
Well, if you're applying for a job that is asking you for a certification, then you are better off having a certification before you apply because somebody else would. The other way would be to convince them that I will get it on job. Okay.
All right. So I guess we have few students also in our session. So they are asking how to start a business as a student and continue study and start a business as well.
Well, you have to have the idea of what you like. You have to think of a product or service and then start working on it. There is no rule as such that you have to be, not be a student, or finish up your studies before starting a business. The best examples are in front of us where you can start. So now is the time to start a business and then try to be unique and focus on the basic, basic rules that we have where you would give service and keep the right price. Okay, next.
All right. Thank you so much, Shahzab. We are done with the question and answer round. Thanks a lot for addressing to all the queries raised on business acumen. So through business acumen, we will be able to improve in our judgments and decisiveness skills. It will help us recognize learning events, manage risks, and definitely increase in our critical thinking. So developing these skills will surely help our audience in seeing the big picture, developing a risk management strategy. We'll know how to practice financial literacy, develop critical thinking, practice management acumen, and finding key financial levers. We will meet again for our next session on Monday, that is 20th July, same time 7:30 p.m.
Sure.
And we will be emailing you the details of our next topic and its objectives. For any queries, issues related to the LMS and assessment, you can write to us at office@ampusa.org. To all the attendees, it is always a pleasure to have you all on board for our sessions. I'm sure through these learning sessions, which AMP has organized in collaboration with the Reed Academy and Swifty Learning Services to benefit the youth of society and nation as a whole, you all will get benefit in many, many ways. Keep joining us in these sessions to learn from our highly qualified and expert speaker, Mr. Shah Siddiqui Sahab. You can also spread the word about us and our sessions. Keep yourself updated through our website www.ampindia.org/pastwebtalks. If you want to join us, kindly visit www.ampindia.org/joinamp. Looking forward to seeing you all again on coming Monday, that is 20th July at the same time 7:30 p.m. for our next session. I would request Mr. Saeed Saab to talk about the LMS for a few minutes before we end our session. Thank you. Over to you, Saeed Saab.
Thank you, Amira, and thank you, Shah Sahab, yet again for the
Thank
wonderful lecture. We have been getting a lot of queries on the LMS side of it from the previous audience and from the new audience as well. So I'll quickly, summarize what is LMS all about and how do we take the courses. So basically, a learning management system is something what we have been providing to all the users who have been attending the webinar. wherein we are giving access to certain reading materials where people can access, the e-learning module, take the assessment, and also the other referencing material as well. So having said that, it is very important that you, as a learner, you clear the assessment in order to get the certificate. So that is a must. So this is how, the dashboard will look like once you sign up. Okay, and these are the 4 courses that have been enabled. Every week, we upload one course, and that course is accessible only for 1 week. So after that, the course disappears, but the assessment is still there. So this week we have uploaded a new course called as Business Acumen. As you can see here, that would be the first course here for you. And when you click on continue, so when you click on continue, okay, so the e-learning module and also the entire course library comes up. So one query what I'm actually getting is, how do we access the course? How do we access the course? Okay, in the dashboard, you will find the name of the course. And the previous courses you cannot access right now because they have been disabled, because as I mentioned, it's only 1 week that we are keeping it open. Assessments are open, so kindly take the assessments, and 80% is the mandatory marks for you in order to get a certificate. You can check your assessment directly from analytical reports, and then you will get access to your reports as well, and you can see, okay, how you've been performing in your LMS. One thing what I would like to emphasize is that even if you've completed the course, you can take the course a number of times. Okay, so having said that, you would always get an option here, incomplete, so don't worry about that. As long as you take the assessment and you pass, that is more than enough for you in order to get a certificate. So please don't worry about that. Now this business acumen course, we have introduced the introduction here, and then there is an e-learning module. So that e-learning module is pretty much what Shah Sahab has in fact just shown to us. And then there are few reference sheets from where you can refer to certain other material as well. And then there's a recommended reading list. Assessment is pending. The assessment for business acumen will be uploaded as early as tomorrow. So that is one thing that is pending from our end, that we will be doing it. Otherwise, apart from that, all the other courses, please feel free to sign up, log in, and then take the assessment. This is it, and we'll meet next week, inshallah. Over to you, Humaira.
Thank you, Said Sam. Thank you for this information. I will repeat in case you have any queries or you face any issue regarding the LMS and the assessments. Please feel free to write us at office@ampusa.org. I'm Humaira Kabir signing off now. Take care, stay home, stay safe. Keep learning and keep coming to our sessions. Thank you. Good evening. Goodbye for now.